Good morning from Los Angeles and happy Monday. It's Alyssa Corman, Ed Carson here with your market update. On today's show, we're taking a look at Apple, Ciena, and Children's Place. Some interesting chart action, so stick with us. And we're taking a look at the major indexes. We are mixed today. The NASDAQ on the downside, down about 1.1%. We have the S&P 500 up slightly, but it looks like it could be entering negative territory. And the Dow off session highs, but still up 0.4% for now. So looking at Apple, we have those shares continuing to fall today, down about 4% after a nearly 7% decline on Friday. We have a report out of Japan that Apple perhaps pulling back on production for its cheaper priced iPhone XR.
Yeah, I mean, that one is down. There's also was a downgrade. I mean, Apple really sold off sharply. It's given up most of its gain from the August breakout when it rose 20% in that month. Not looking very strong. The 200-day line is coming into play. You know, it's definitely negative action. And it just shows you, you know, Apple was one of the best performing stocks during this market correction. But it shows you, like, if you're buying in a market correction, that's not a good idea. Buying before earnings is not a good idea, and buying before a breakout. And Apple was violating all three of those, even though you'd say, well, this is really the top performer. It's going to be a big winner. Well, you know, then sometimes this stuff happens. And so it's why you should be really cautious for all those reasons.
That's right. Now Apple now nearing its 200-day line. So we'll have to see how it acts around that level. And after we go over the action of the next two stocks, we'll take a look back at the major indexes and give a broader perspective at the end of the show. So looking now at Ciena, we have that stock breaking out today, up 4%. So this is a stock that is looking very technically healthy right now, where breakouts are few and far in between. Yeah,
it's interesting how this stock is doing well, even though techs, you know, are not doing well. But some of the other fiber optic stocks are doing pretty well. It's clearing a breakout, a buy point. I think it's 32.43, and that it's pretty strong performance. A base on base. It's been acting well. The relative strength line, powering to new highs, really showing its leadership versus the S&P 500. Its fundamentals are a little spotty. You know, went through some rough patch, but it's definitely one to watch. But again, it's a market correction still, and so, you know, investors should be extremely cautious about making any new purchases right now, just because it would not take much for, you know, the market to sort of drag it all down.
That's right.
So.
We have the majority of stocks moving in the same direction as the overall market. So broadly in this tech space, when you have the NASDAQ logging so many losses, that's right. A lot of stocks are moving in the same direction, so it could easily turn tail, but we'll be watching this breakout very closely. And we also want to take a look at Children's Place. Along with Ciena, Children's Place, as of Friday, was nearing a buy point in our stocks to watch column, but this one moving in the opposite direction, down over 12% on the news that some of its key executives are leaving, and this comes right around the time that the companies hit a little bit of a rough patch with earnings. Yeah,
I mean, it's sort of interesting in that, you know, there had been somewhat of a turnaround. The stock had been nearing a new buy point, and this is why we were suggesting this is a stock to watch, which you wrote about this one, you wrote about Ciena, but this is why you watch them, not necessarily
buy them.
Not necessarily buy them. It was not at a breakout, and so the stock was doing well, and then it fell down. I mean, you know, you look at these patterns to give you an idea of how things are going. Hey, this is setting up nicely. It's setting up, but they don't always work out. I mean, it's sort of, you know, it just doesn't happen. Like a draft pick that you think, oh, there's a surefire winner. It's like, well, they often are busts. And this one was a bust even before it got a chance to break out. And it's just something to watch out for, especially in a correction. You wait for the breakout. You wait for are, real, everything going right. You want all the green lights.
Yes, exactly. There are so many different factors that go into the decision to buy a stock. In addition to the overall market corrections, you have the fundamentals, how it's looking technically, and then when you get news like this, you can't really foresee that sometimes.
That's right.
All right, and looking at the NASDAQ, checking in on how that is tracking now, down about 1.2%, so sliding even further here. The S&P 500 and Dow are holding about where they were at the start of the show. The Dow up about 0.5%, the S&P 500 up 0.1%. So looking at the chart of the NASDAQ here, last week we saw the tech-heavy index nearing the 200-day line, but hitting resistance below that 7,500 level now.
Yeah, it's a pretty big sell-off, and it's not just Apple. I mean, Apple's the biggest component, and that's definitely driving that. But Amazon, which was right at its 200-day, can bounce back. That one was down sharply. There's a lot. All the FANG stocks are down, like 1%, 2%. It's just a negative market right now. It's an important week because this was a week where Friday was sort of like one of those first opportunities to see that follow-through data confirm the rally. Well,
didn't get that.
Didn't get that. This week would be fine to see that happen, but we haven't had it yet. And it just, the idea isn't to call the bottom, it's to call when is it seem like, okay, this really has legs, this is really going to last.
Right.
And so this is negative there. The S&P, though, is trying to get to its 200-day line. So, techs may not be the winners again. I mean, it's exciting to talk about techs, but maybe they aren't going to be the winners.
That's right. We'll definitely keep an eye on all the market action for you. So head over to investors.com throughout the day and after the close for the latest market news and analysis. And be sure to check us out on social media, whether it is Facebook, Instagram, Twitter, or YouTube. Thanks for joining us, and we'll see you back here tomorrow.